time now to look at the stock markets. Markets just opened about 15 minutes back, and it's a very choppy, very volatile first 15 minutes. In fact, something that we haven't really been witness to, and that is an indication that we're also getting in the India VIX, which is above that psychological level of 12. In fact, the volatility index is at about 13.25 points this morning. Meanwhile, Sensex and Nifty continuing to see sharp cuts. In fact, yesterday was an aberration when markets closed higher, but we're seeing some sort of profit taking happening this morning. Sensex, as we speak right now, is barely at the 83,000 levels, down about a quarter of a percentage point from yesterday's slightly higher, about 600 points higher closure. Meanwhile, Nifty 50 barely touching the 25,600 odd levels. In fact, at 9:30 a.m. about 11 points lower than that at about 25,589. The small cap and the mid-cap space is giving you some sort of mixed signals. While you see the mid-cap space pretty much mirroring the Nifty 50, the small cap is absolutely flat this morning at about 17,000 points or so. Let's look at the Nifty 50 heat map, and you'll be surprised to see that the Nifty 50 heat map tells us this morning it is not the IT sectors which are leading the losses. In fact, everything else seems to be in the red, and all this seems to be an account of what we've seen coming by way of the trade data. In fact, in the month of Jan, India reported a trade deficit ballooning to almost $35 billion. This is significantly higher than the $25 billion or so that we saw in the month of December. And this is not the only domestic macroeconomic headwind. There is also the unemployment rate, which has ticked up to a 3-month high of about 5% for the month of Jan. So macroeconomic data not really aligning with the overall sentiment that markets have become used to. And this is reflecting in the larger import-driven stocks also this morning. So look at the stocks of Reliance Industries, which are down about a percentage point or so. And across the board, you're seeing cuts. Look at the BFSI space. Big names like HDFC Bank, ICICI Bank, Kotak Mahindra Bank, all reporting losses this morning. Meanwhile, even the auto sector seems like a mixed bag. Maruti Suzuki down slightly in the red, but Mahindra and Mahindra taking deeper cuts at about 3/4 of a percentage point. Even the energy mineral space seems to be reeling under some pain this morning. Ultratech Cement is down about 1%. Tata Steel is down a little over 1%, and JSW Steel also about 0.7% or so down in trade this morning. Hindalco continuing with its downward pressure, down about 2.5 percentage points. Meanwhile, let's look at the IT sector, and the IT sector is where the surprise element comes in today. So after days and days of cuts that we saw, this morning, we are seeing the IT sector in a healthy shade of green. In fact, TCS is up 1%, Infosys is up more than 2%, and HCL Tech is up about 1.2% or so. Even Tech Mahindra up almost 1%. Wipro trading more or less flat this morning. So the IT sector is seeing some sort of buying on dip activity really picking up momentum, and this in spite of the AI summit here in Delhi and pretty much questions being raised about the future of India's IT services industry. But we are seeing that perhaps slower PEs of about 20 is what the IT space is likely to settle at. We'll tell you more about IT sector and its performance over the year in just a bit. But meanwhile, look at some more market action, and especially yesterday, as we had 2 IPOs really get listed on the main board. One was the Kwality Walls IPO and the other was the Fractal IPO. And incidentally, both these big names listed on the stock markets with some major cuts. Kwality Walls, which demerged from Unilever, saw its listing price at a discount of almost a quarter or so, about 25% or so below its expected listing price. So it demerged from Unilever and then went ahead and listed on the National Stock Exchange at about a little under 30 rupees per share. Remember, this is a discount of about 26% or so, 25.87% to the last discovered price during the IPO. During the demerger, I beg your pardon, at about 40 rupees or so a share. The market cap is at about 7,000 crore rupees. This, remember, is now coming at a discount of about 25% or so. There were estimates that it would be nearing the 10,000 crore rupee mark, but not really a very hot listing. In fact, the ice cream space has seen absolutely stone cold reaction from investors. Meanwhile, another cool sounding company, Fractal's Analytics, did not also live up to investor expectations. In fact, the IPO listed at a discount of about 2.6%, at some point about 2.7% or so. at about 876 rupees per share. This was at a discount over the 900 rupees targeted. Meanwhile, on the BSE, it continued to list in line with the 900 rupee expectation, and that is something which is neither really a reason to complain nor something to really be too jubilant about. Meanwhile, look at the IT space, and the IT space is something which has pretty much been the talk of the town all year long, and in fact not just this year, even last year. And we've done a little exercise of comparing the returns on Nifty IT, the big blue chip IT stocks which are listed on the Nifty 50 versus the 50 stock Nifty basket on its own. And since Jan of 2025, that's about 1 year and about a month or so counting, in the last 13.5 months, the Nifty IT pack has slipped as much as almost 25%. And in the same period, the Nifty 50, the 50 stock basket, has given investors a positive return of about 8.2%. Now let's move on to this year, and data from the 1st of Jan 2026 tells us that while the Nifty 50 has also been down almost 2%, the cuts in Nifty IT have been much steeper. Nifty IT is down about 14.2% since 1st of Jan this year, which is pretty much just the last 45 odd trading days. Look at just the month of February, and let's move on to the month of February now. In the month of February alone, Nifty 50 has inched up about 3.5%. Remember, big announcements coming by way of the India-US trade deal getting inked, the big news of the mother of all these, the India-EU FTA, as well as the budget, which did dampen some sentiments. But this big news environment has inched up the Nifty 50 in the month of February to about 3.5%. But the Nifty IT pack continues to see deep cuts, in fact down about 14.4%. Meanwhile, as the India AI Impact Summit continues, there are critical questions which still don't have solid answers to. First, does India have a pure play AI story when it comes to stock markets? And unfortunately, the answer to that is pretty much no, because apart from Fractal's analytics, we haven't really seen any pure play AI stocks listed. While there's a lot of action in startups, we haven't really seen IPOs of AI-driven startups just as yet. Meanwhile, should investors go ahead and participate in the data center story? Now, some analysts out there tell us that potentially sectors like power, sectors like infrastructure and real estate could get a sort of fillip over the next few months, given the surround around artificial intelligence and data centers. Next up, there are going to be telecom stocks, and telecom stocks also continue to be in focus with this large AI story unfolding. But the question really is, apart from Bharti Airtel, do we really have a strong bet to make in the telecom space? Because remember, Reliance Industries and Jio Telecom have not demerged, and there haven't really been any concrete announcements just as yet. And the telecom sector continues to be a duopoly, and the fact that Vodafone Idea continues to reel under pressure, trying to recapitalize itself and pay off its debt, is not boding too well for India's telecom diversification story. And finally, there's going to be the device space. So should you be looking out for device manufacturers, those who make smartphones and tablets and laptops and computer parts? Should you be looking at LG Electronics, which had a massive IPO debut last year, and companies like Dixon, which have been under pressure over the last few months? Is this where the real AI play is going to unfold? Well, these are sectors that one should watch for, but wait and watch seems to be the word coming from the street. So that's all we have here on the stock market update and the AI story. With that, we will slip into a very short break, but a lot more coming up on the other side of the break. But do remember, markets reacting pretty much to the trade deficit number that we saw, which has jumped to almost $35 billion, up from about $25 billion in the month of December. Estimates were that India's Jan trade deficit number will come at just about $26 billion, but it has surpassed that pretty significantly. Meanwhile, unemployment also continues to be a problem, and 5%, a 3-month high. The unemployment number also pretty much not coming in line with expectations.